Hey, it's Mac, and I'm going to try to demonstrate this short here. Notice we had this little trading range, and we had a breakout, and this is going to be an engulfing. We broke higher first and then turned down. All right, I'm going to move my stop to one tick above the signal bar there. And again, notice that we're in this trading range. The trend is down, and we failed out the top, so I'm trying to take advantage of the failed breakout there. And I've got a runner here. We'll see how prices react here. I may slide this up if we start to get some support right here. I may just close it. We start to get some support here. Of course, I got to get scalped out here first, but I feel pretty confident this trade's going to work out. So we'll see what happens here. But again, notice the resistance across here, support across here. We traded down into this, and what happened was prices failed out the top, and they actually broke higher here and turned, and this was an engulfing bar. So all this happened in one bar basically. The breakout didn't, but I mean the setup here. Normally you wouldn't want to use this for a signal bar, but it broke higher first and then turned down, and so that's why I like to go in short there. It looks like we actually lost a tick there. So I actually lost a tick there for slippage, it looks like. I'll have to go back and watch the video unless I had my order in the wrong spot. I lost a tick there. That doesn't happen very often in the ES, but I'm pretty sure I had my order one tick below that bar, but maybe I'll have to watch it when the video's over to see if maybe I miscalculated there. In this volatile market, it's not uncommon with a big bar like this to see prices back up. And one thing you can always try is to let it break lower and then drop your limit order and try to get a better entry. You're going to miss the very best trades doing that, but on something like this, that probably wouldn't necessarily be a bad move. So just something to think about. I may pause this video and start it back when we start to get more going here just to, oh, here we go. I just hate for the video to be 20 minutes long for a trade example, but I may pause it and start it back as we start to get some action going here. We're just kind of, it's not uncommon for prices to come back and retest this again or to make a lower high. And if we do, we'll also may get a second entry short here, which would set up another possible trade if we're not too far into the middle of the, if we're not too far into the range or whatever. That's something else to think about. Things have really seems to have slowed down here. And again, we could see a second entry short here. Of course, my phone's going to ring right in the middle of a trade here. I'm not going to answer it though. What a slow trade. I've noticed that's what happens today. It kind of chops around, then boom, then it finally moves, chops around, boom, chop, then we chop around. So the market's just kind of odd the way it's moving. There's no consistent follow through on anything today. Here we go. Come on, push on through there. Usually you got to push through these limit orders to get. We banged off my order several times there, so there's obviously some buying going on right at that same location. I'm probably not the only one trying to scalp out there. That's one of the benefits. I haven't talked about this in a while, but one of the benefits of using the ATM strategy is that it generally will. The orders are all filled on a first in, first out process. So the quicker your orders in there, the quicker you get out. So with that automatic strategy, as soon as your order's triggered, it automatically places your other orders. So it gets you in the queue a lot earlier. And every once in a while, you get real lucky, and you'll get your order, a limit order filled without actually trading through it. It don't happen. It does not happen often, but occasionally it does. And there we go. So we're out. I'm going to move this to BE plus 1 since we're in this range, and I may slide this up because it's a good chance we may bounce here, although we could go lower too. We've already scalped out with 15 points, and if we get this runner here, we'll add another 15 points. So this will be a 30-point trade if we get this order filled right here. Come on. A couple more ticks. Come on. Don't bounce now. You guys get to hear me talk to the market. I love to talk to the market. So my kids used to come in when I used to trade some from home. They'd come in and say, "Dad, who are you talking to?" Say, "I'm talking to this market." It looks like we're going to bounce at the support here. Got mixed emotions about this one. I'd like to get that full scalp out of this, but I mean it's full target out of this runner, but here we go. Come on. Really struggling to push it down there. There we go. So there was a quick 30 points. I mean, actually, I wouldn't say that was quick. Once it started moving, it was really quick. And if you'd have waited on the second entry, which triggered one tick below this bar, you would have, you wouldn't have had to wait as long as I did there. But the key is you don't always get that lower high or second entry there. So notice that's a new swing low. It's lower than that one. So we're moving up, and that's the first time prices broke lower on that bar. So that was a first entry. But prices opened right beside it and then started trading up and traded out the other side and then turned back down. So technically that is a second entry right there that I took. But that's a little more complicated. It's a little, the clear, easy to see second entry is right here. And I would still call this a second entry short when it broke lower right there. And again, the reason I took this trade was the failed breakout and the little trap right here on this engulfing bar. Obviously, it didn't trap a whole lot of people because if it had, it would have dropped down really quickly, much quicker than it did. It took that a little bit of room to push through my limit order and fill it. So And of course, once we made the lower high, a lot more traders can see the way we're going low, and the less aggressive entries are going to come in now, and you see how quickly it moved down there. Again, we haven't got through this support though. Wouldn't surprise me if we push on through. I wouldn't be surprised at all to at least see a measured move like this right here. Not sure if we will, but wouldn't surprise me. I mean, I wouldn't be surprised to see it go on down from here, but let me just put that on there. But let me back out and you can kind of see the bigger picture. There's a two-tiered channel working lower here, and this was the first break of it, and now we're really pushing to try to retest that low. And the market's really slow about it. Of course, this is a Friday afternoon, summer afternoon, and you can see it slowed down a little bit. The market's still really volatile, but it's definitely slowed down. No doubt about that, because these bars are not forming nearly as quickly as they were. So I hope you can see that. And one other thing, another trader, in the past, we've traded volume charts. One time there was a problem with the tick charts, and we moved over to a 10,000 volume chart, which was very close to the normal 2,000 tick chart. And so another trader suggested today about looking at that and maybe considering going back, because it will be less volatile and probably a little clearer and easier to see, and the bars won't form so quickly, and they may not be quite as big either. So he may be on to something there. I've opened up one and I'm watching it, and that chart is definitely reading slightly different than this one. There's still actually, I'm just going to put it up here and let you look at it. Here's the 10,000 volume chart. And you can see that you don't find the channel, and I mean, it looks like it's here. I drew it off the lows and drug it up, and we did turn down there, and you can see we tested it a few times, and there has been a break of it too. Just very slightly we've closed outside, so that may be good enough. And so, I mean, you can see how many fewer bars. You can see how it's kind of tamed things down, but I want to see it at the end of the day and just look to see. I'm not telling anybody to go trade this yet. I want to look at it and just kind of get a feel for it. But if you want to test it out, by all means do. But you can see how much it slowed it down. Slowed it down considerably. So again, here's the other chart. Let me back out. And you can see how much more volatile that is than this is. So it definitely slows it down. You still got some relatively big bars. Maybe they're not quite as big. Let's see how many ticks were in this bar that triggered my trade. There's only 8 ticks in that bar. And let's compare that to the one I had to trade. Let's see how many ticks were in it. It was this red bar here. And same thing, 8 ticks, so didn't change it a whole lot. But you can see there's not nearly as many really large bars. Let's see what this one was. 9 ticks there. And that would have been this bar here. And this one has 10. So there's not much difference. Now there's a whole lot less bars here than there are on this chart. I mean, that's really fairly obvious. I mean, it just kind of tames things out. But here's the thing: I like seeing this extra details in the price action. Once you get skilled where you can read it, you'll want to see more of the details in the price action. So by going to this other chart, you're going to lose a lot of those details. I still think it's very tradable. Notice right here, there's a first entry, second entry, and it actually makes another entry up, a third entry, but the failure happens at the same place right there, and that would have been a nice failed second entry long coming off the highs. There's a lower high here. That would have been a great trade. You just saw the trade I took. There's a second entry. Really, mine on this chart, the second entry would have been here. You could have just traded that as a failed breakout if you wanted, but if you wait on the second entry, that was a nice, quick, easy trade. So there's some merit to this idea. So again, I'm not telling everybody to go trade it. I'm going to watch it for a few days and I'll comment on it and we'll go from there. But this was supposed to just be a trade example, but there's some other good stuff here that hopefully you've learned some other stuff on this. So and we'll look at that 10,000. I'm going to watch it. 10,000 volume is what that is. If you want to open one and watch it, feel free to do so. I'm not telling you to trade it yet, but from everything I've seen this afternoon, there were several good trades on there, and it would have definitely quietened things down quite a bit and slowed things down for you. So just something to think about. I'm going to wrap this up. It's still going to be a 20-minute deal here, so we'll wrap it up, and we'll hope everybody has a great weekend. But I'm done for today. Again, we'll be back Monday with a regular chart lesson.